doing today? Okay, good. I'm so glad to hear that. What can I help you with? Oh, okay. So you are working on your tax return filings right now, and you need a little bit of assistance with that. Well, I can assure you that I can definitely help you with that today. Did you bring any tax documents with you by any chance? Perfect, you came prepared. Thank you. Okay, I will take a look at those. Let's see, let me take down a little bit of your information. How's your day going so far? Good. Mine's going very well too. We're definitely very busy here at the tax accounting firm. It's a very busy time of the year for us, but don't worry, we still have plenty of staff and plenty of time to help with your tax return. Okay, so your name. And your spouse's name. And what are both of your date of births? Great. And your home address looks like it is on the documents that you provided. Okay, and then social security numbers are also on here. Okay, great. So that will provide just a base for your tax return for the informational items. So your residency state is okay. And then do you work in any other states? Okay, well that makes things nice and simple then. All right, so let's see what we have here. Looks like we have a W-2. And we'll of course make sure that all of your information and tax documents remain confidential. Okay, let me just put this information into the system. W-2, wages, social security, wages, Medicare, wages, income tax, withheld, social security tax, withheld. Okay, so that seems to be in order. All right, and then we have here, we have a letter from the IRS regarding your 2021 economic impact payment. Okay, perfect. Just plug that in here. Do you have any children? Okay, so what are their names and dates of birth? Okay, so they're both very young. So, assuming that you are under a certain income threshold, you should receive the child tax credit. And it looks like you might also be eligible for an additional economic impact payment since one of your children was born in 2021. And the IRS did not have a record of that when they sent you your economic impact payment. But you will be able to claim it on this tax return to hopefully be able to get you a refund. Okay, and then here it looks like we have a 1099 for interest income that you received in your portfolio account, or no, portfolio account, or just a savings account. Okay, perfect. Okay, so that covers all of your tax documents. Let's see what else. So let me pull up your tax return. And then I will have a couple of follow-up questions for you. Let's see. Okay, so what else do we need here? Let's see, at any time during the 2021, did you receive, sell, exchange, or dispose of any virtual currencies? Okay. There are some very complex rules involved when it comes to the virtual currency, which a lot of people don't realize, but because you don't get a tax form the same way that you do with a lot of the portfolio accounts. There's not really any kind of standardized reporting on cryptocurrency yet. That is currently in process. I know that they're trying to work on a lot more standardized ways of reporting things to make it easier for everybody, but obviously that's not really the point of cryptocurrency. So I know it's kind of it's a very interesting topic right now. Let's see, so you have two dependents. One of them is under 1 and the other one is 4. So they're both going to qualify for the child tax credit. You have some wages. You have a very small amount of interest. Did you receive any dividends that you know of? Okay, so you didn't get any distributions from your IRA, did you? Okay, so no, so everything in your IRA is just going to stay there. You shouldn't be reporting any of that as taxable income on your tax return. Not until you take distributions, which since you're fairly young, you wouldn't be taking them for a little while. Okay, so yeah, any of the dividends and capital gains coming through your IRA, that's not taxable until you start pulling it out. Any capital gains or losses that you can think of? Do you have any brokerage accounts? Okay, and nothing else that you sold during the year that would trigger any kind of a gain or a business loss? Okay. Let me ask you this. Do you own your house or are you renting? Okay. Okay. So you pay mortgage interest and real estate taxes then. Do you have a ballpark estimate of how much you think you paid in mortgage interest and real estate taxes in 2021? All right. And what about any donations to charity? Okay, yeah, that would be allowed as a deduction. Okay. No, I don't need the documents. As long as you have them and you know what they are, that's fine. Okay, yeah, that one would not be considered a deductible donation. I'll put it on here, but that one is not to a charitable organization, even though it was a very kind gesture that you made. Okay, let's see. Okay, so can you think of any kind of business income that you might have received outside of your wages last year? Like, are there any side hustles that you run on the side? Anything that you might be getting income from or have various expenses from? Okay. And you don't have any investments through partnerships or S corporations, correct? And you don't have any trusts, do you? Okay. All right. Do you have any foreign investments or foreign bank accounts? Okay. Oh, so did you make contributions to your IRA in 2021? And do you know if your IRA is a traditional or a Roth? We typically would. Well, so there's some key differences between both of those types of retirement accounts. So the traditional IRA, if your income is under a certain threshold, you can deduct your contributions against your taxable income. So it will provide a little bit of a tax benefit today. The Roth IRA has that income on it, and you can't deduct it on your tax return. You can't deduct your contributions that you make. However, when you pull that money out down the line, when in your retirement, when you pull it out, it's not taxed. So the real benefit is locked into that appreciation of your contributions over time, because the government doesn't get a piece of it. So with the Roth IRA, you also you have to make under a certain amount of money to be able to contribute. So there's a lot of different thresholds and limitations to consider to figure out what's best. But I think that for you, the Roth IRA is a good option. The only downside is that you don't get the tax benefit today, but I think it outweighs the appreciation on the assets that's not getting taxed will outweigh that benefit. So I think that's great. Let's see. All right, so if I go ahead and put everything in here. Let's see what we're working with, okay? Okay, so what we currently have for you is a tax refund of $3,244. Does that sound good? Okay, so We can electronically file this for you. I just need to have your signature on the e-file form before we go ahead and file it. So I will print out a copy of this for you. You can look over it, make sure that everything seems to be in line with what you were expecting, and then I will go ahead and file it for you, and you should expect if you would like, you can get your refund direct deposited, which is what I would recommend. That's what I like to do. These days, the IRS is taking weeks and weeks and months to process things, so I would highly recommend trying to get an electronic refund as opposed to a check, because I don't know what the difference is in the timing, but typically you'll get refunded within a couple of weeks, maybe 3 or 4 maximum. But I think that looks good to me, so I will get that over to you for your review and signature. Does that sound good? Okay, well, thank you for coming in today, and I'll talk to you very soon.